Hello guys, welcome back to my YouTube channel. In this video we will cover loans. What is loan? Types of loan. What is a loan? A loan is when you receive money from a friend, bank or financial institution in exchange for future repayment of the principal plus interest. The principal is the amount you borrowed and the interest is the amount charged for receiving the loan. Since lenders are taking a risk that you may not repay the loan, they have to offset that risk by charging a fee known as interest. Loans typically are secured or unsecured. A secured loan involves pleading in assets such as a car, boat or house as a collateral for the loan. If the borrower defaults or does not pay back the loan, the lender takes possession of the assets. And unsecured loan option is preferred but not as common. If the borrower does not pay back unsecured loan, the lender does not have the right to take anything in return. So now we discuss the types of the loan. The first one is a personal loan. You can get these loans at almost any bank. The good news is that you can usually spend the money however you like. You might go on vacation, buy a jet ski or get a new television. Personal loans are often unsecured and fairly easy to get. If you have an average credit history, the downside is that they are usually for small amount, typically not going over 5,000 US dollars, and the interest rates are higher than the secured loans. Number second is the cash advances. If you are in pinch and need money quickly, cash advances for your credit card company or other payday loans institutions are an option. These loans are easy to get but can have extremely high interest. Number third one is the students loan. These are great ways to help finance a college education. The most common loans are suffered loans and precons loans. The interest rates are very reasonable and you usually do not have to pay the loans back while you are a full-time college student. Number fourth one is the mortgage loan. This is most likely the biggest loan you will ever get. If you are looking to purchase your first home or some form of real estate, this is likely the best option. These options are secured by the house or property you are buying. That means if you do not make your payments properly, the bank or lender can take your house or property back. Mortgages can help people get into homes that would otherwise take years to save for. They are often structured in 10 to 50 or 30-year terms, and the interest you pay is tax deductible and fairly low comparable to the other loans. Number fifth one is the home equity loans and lines of credit. The homeowners can borrow against the equity of they have in their house. With these types of the loan, the equity or loan amounts would be the difference between the appraised value of your home and the amount you still owe on your mortgage. These loans are good for home addition, home improvement or debit consolidation. The interest rate is often tax deductible and also fairly low compared to other loans. Number seventh one is the small business loans. Your local banks usually offer these loans to people looking to start a business. They do require a little more work on than other normal and often require a business plan to show the validity of what you are doing. These are offered secured loans, so you will have to pledge some personal assets as control in case the business flares. So now how does a loan work? I own a house in the big city which cost 1 lakh US dollar. I do not need to live in it right now, but I might in the future. I would like to make some money of it without selling it. I put the house up with for rent of 500 US dollar per month. If you are looking for a house in the big city, because this allows you to work in the city and earn a good salary and enjoy city life, you do not have the capital to buy a house, but you can afford rent in the city with your 1500 US dollars per month salary. You can call me up and we sign a rental lease. I have loaned you the use of an asset for a set period of time, and you are paying for me its use. A loan is exactly the same, but the asset is not a house but rather a sum of money called the principal, and the payment is not called rent but rather interest. Furthermore, while a house is usually returned to the end of the contract period,